Welcome to my YouTube channel, Wealth States. Let's start video real estate versus stock market. Which is better for wealth building, real estate or the stock market? Which is the better path to wealth? It's the classic battle for anyone serious about financial freedom. Both have created millionaires and left others broke. So what's the difference? And which one should you put your money into? By the end of this video, you'll have a crystal clear roadmap to make a smart, informed choice. Ready? Let's dive into the pros, cons, and surprising truths about real estate and stocks. Why real estate and stocks are popular wealth building tools. Point 1. Real estate. Tangible wealth and control. Let's start with real estate. It's tangible. You can touch it, see it, even live in it. And that tangibility, it creates a feeling of security. You have more control with real estate investments. You can improve the property, decide rental prices, and build equity over time. Plus, historically, real estate values tend to appreciate, making it a strong option for building long-term wealth. Ever wonder why your grandparents insist you buy a house? It's not just nostalgia, but real estate isn't all sunshine and rainbows. Let's talk about what could go wrong. Point 2. The downsides of real estate. Real estate comes with its own set of challenges. Property management can be a full-time job. There's also market risk. Remember the 2008 housing crisis? A downturn can devastate property values. And then there's the issue of liquidity. Selling a property can take months, meaning you can't quickly access your cash when you need it most. Imagine you need cash, but all you have is a house. Anyone have a crowbar? So with these risks, how does real estate compare to the stock market? Let's jump over to stocks. Diving into stocks, the power of compounding and accessibility. Point 3. Why stocks are popular for wealth building. On the flip side, the stock market has a unique power, compounding. By reinvesting your returns, you're effectively earning money on your money without lifting a finger. Stocks are also much more liquid than real estate. You can sell your shares within minutes. And with the accessibility of investing apps today, getting started is easier than ever. Want to be an owner of Apple or Amazon? Well, welcome to the stock market. But stocks can be a wild ride. What about the risks of losing it all? Point 4. The risks of investing in stocks. Here's the harsh truth. The stock market can be volatile. A company's bad quarter, economic news, or even a tweet can send stocks spiraling. In a worst-case scenario, you could lose everything if a company goes bankrupt. And unlike real estate, you can't control a stock's performance. Think of stocks like a roller coaster. Thrilling when you're up, terrifying when you're down. So, which one should you trust for stability and growth? Let's see how they stack up side by side. Comparing the two, which one suits your wealth goals? Point 5. Stability versus growth. Potential. Both real estate and stocks have their strengths. Real estate tends to offer more stability, especially if you're looking to build wealth gradually and enjoy cash flow from rental income. Stocks, however, have a higher potential for quick growth, especially if you're investing in the right companies. Want a steady climb? Go real estate. Craving a thrill ride? Try stocks. But which is better if you're just starting out? Let's break it down further. Point 6. Entry costs. Real estate's barrier versus stock accessibility. Starting in real estate often requires a hefty down payment and good credit. Stocks, you can get started with $10. This low barrier makes stocks attractive to young investors. But there's a trade-off. While you can dip your toe in stocks, real estate offers benefits like leverage that let you amplify gains with borrowed money. Is your bank account looking like starter cash? Stocks might be your friend. Leverage sounds appealing, but is debt really the best tool for wealth? Point 7. Leverage. Friend or foe, leverage lets you control a large asset, like a house, with a relatively small amount of money. If the property appreciates, your returns multiply. But leverage cuts both ways. If prices fall, your losses multiply too. It's like playing with fire. It can keep you warm or burn you out. Feeling the heat? Let's talk about risk management for both assets. Point 8. Risk management and diversification. The key to smart investing, whether in real estate or stocks, is risk management. Diversification protects you from putting all your eggs in one basket. In stocks, that means a mix of sectors and industries. In real estate, it might mean investing in different property types or locations. Ever bet everything on one horse? Not a good wealth strategy. With both paths covered, which is the ultimate winner? So, which is better for building wealth? It all depends on your goals. Real estate offers tangible control and steady returns, but requires more upfront cash and time. Stocks are more accessible and offer growth potential, but can be volatile. The best strategy? Diversify where you can. Balance the stability of real estate with the growth potential of stocks. Ready to take control of your financial future? Check out our next video on how to make money in today's economy, a complete guide. Click on the end screen to dive deeper into practical wealth building strategies. Thanks for watching this video. If you're ready for more personal finance insights, subscribe to Wealth States and stay ahead in your wealth building journey.